But that's the strategic puzzle that makes a company like NIO so fascinating right now. They're not just trying to grow, they're trying to evolve fast enough to survive the biggest automotive shakeout in history. What do you think? Are Onvo and Firefly NIO's tickets to those final 12 seats at the table, or are they launching into a bloodbath? What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, a podcast where we talk about business and technology. You know, today I was looking at some fresh data that just dropped, and let me tell you, it literally gave me the chills. By 2030, that's just 5 years away, Chinese auto brands are projected to capture 1/3 of the entire automobile market. Think about that for a second. We went from Japanese cars are dominating, owning 25%, to China owns majority of everything at 30%. But here's the thing, and here's why I wanted to talk about this today. This isn't just some victory lap for Chinese electric vehicle investors. The Chinese automobile industry is facing two major challenges that could make or break this global domination story. And for those of us watching NIO, these challenges hit right at the heart of NIO's strategy. Let me paint you a picture with some hard numbers. Right now, Chinese brands own about 21% market share. They literally just overtook American brands for the first time in 2024. We're talking about almost 18 million Chinese brand passenger cars sold globally. But to hit that 30% target, that would be a massive leap. And here's what's interesting. China exported 4.91 million vehicles in 2023, overtaking Japan as the world's largest auto exporter. The export surge is insane. In just 5 months of 2025, China's auto exports hit 37.3 billion US dollars. That's nearly triple from 2022. The UAE alone exported 2.7 billion dollars worth of Chinese cars, which is up 551% from 2022. 551%. But here's where it gets interesting and concerning. This export boom isn't happening because Chinese brands suddenly cracked some magic formula. A lot of it is driven by desperation. Domestic overcapacity is brutal. Get this, out of 70 active Chinese automakers in 2024, only about 15% of them reached the minimum 70% capacity utilization needed for profitability. 15%. Compare that to Tesla Shanghai running at 96% capacity utilization, or BYD maintaining 80 to 85% capacity utilization. The winners are pulling away, but the majority are drowning. Now let's talk about the price war too, because this is where things get messy. The average passenger car in China hit a peak of 183,000 yuan in 2023. That's nearly 20% higher than 2019 levels. But then reality hit. By 2024, that dropped to 177,000 yuan, and by the first half of 2025, we're down to 171,000 yuan. There's been a slight recovery. We've seen prices uptick from 170,000 to 174,000 from January to June. But analysts are warning that with the summer being a down season and overall consumption downgrading, the pressure isn't going to let up anytime soon. So where does NIO fit into all this chaos? This is where it gets fascinating from an investment perspective. Historically, NIO's been insulated from all of this overcapacity chaos because for the fact of the matter is that they just stayed premium, they stayed focused, and they kept volumes relatively controlled. But now they're launching their family brand Onvo for the mass market, and they're launching Firefly for the European compact market. They're literally jumping right into the deep end of this capacity utilization game right as consolidation is accelerating. Here's a strategic question that keeps me up at night. Is this capacity expansion a strategic move to capture more market share as weaker players fold and the market consolidates? Or is NIO about to fall into the same overcapacity trap that's killing about 85% of their competitors? Let me break down what's working for the winners. BYD, and I give credit where it's due, they've cracked the code on vertical integration. They're making their own batteries, they're making their own chips. That's how they can slash prices without destroying their margin. They sold 4.24 million vehicles just last year with that strategy. NIO's approach is fundamentally different. Instead of vertical integration, they're betting on battery swap technology and software differentiation. But when you're competing in mass markets with both Onvo and Firefly, can that moat hold up against competitors like BYD who can afford to race with you to the bottom. The export opportunity is massive. We're seeing Chinese companies flood the Middle East, Mexico, Russia, and Southeast Asia. But here's the reality check. Only the strongest players can actually execute on export. The average capacity utilization of the top Chinese exporters was 57% in 2024. Still higher than the industry average, but you need scale and expertise to make something like this work. This brings us to the consolidation story where I think the real drama unfolds. Industry experts are predicting only a few dozen Chinese companies will survive long term. We're looking at a Matthew effect on steroids. The stronger are getting stronger while the weaker are getting weaker, eventually until they perish. BYD already controls 27% of China's retail market, but there are still 120 brands fighting for the remaining 37%. And so NIO is making a fascinating bet here. Instead of staying small and premium, they're diversifying with 3 brands across the NIO portfolio. They're doing it right as this consolidation accelerates too, which is the interesting thing. It's either going to secure them for those final 12 seats, or it's going to stretch them so thin that they miss the cut entirely. Look, I'll be honest with you. I'm bullish on NIO. I'm invested, but I'm not blind to the risk. What we're witnessing is the most competitive automotive market in human history. The Chinese government is even stepping in to prevent further price wars because they're worried about industry stability. Some companies are getting propped up by local government support, and this is something that NIO has benefited from, but ultimately this is going to come down to execution at a massive scale beyond just China. Here's my take, and something that I think a lot of you will agree with. NIO is not just fighting Tesla anymore. They're not just fighting traditional automakers. They're fighting for survival in a market where only the most strategic, most well-positioned players will even make it to 2030. The global opportunity is massive. Chinese brands really could hit that 1/3 market share, but domestically, is going to be a carnage. And NIO's success with Onvo or Firefly, that's not just about capturing market share. It's about generating the volume and efficiency to be one of those survivors in 2030. The next 18 months will tell us everything. Can they scale without drowning in overcapacity? Can they compete on price without destroying margins? And can they establish a meaningful export presence while the window is still open? That's the strategic puzzle that makes a company like NIO so fascinating right now. They're not just trying to grow, they're trying to evolve fast enough to survive the biggest automotive shakeout in history. What do you think? Are Onvo and Firefly NIO's tickets to those final 12 seats at the table, or are they launching into a bloodbath? That's it for this episode. Leave a comment down below. If you found this episode useful, valuable, insightful, at the very least entertaining, make sure you click the notification bell icon. Again, leave a comment down below, click the like button, and hit the subscribe button so you never miss when I post. Thank you guys for watching. Your engagement really does go a long way in helping out the channel. This is Obi signing off, and I will see you in the next episode of the Courtside Financial Podcast. Take care and stay invested and stay informed.